Ladies and gentlemen, dear traders, welcome. This is the second episode in our simple series. So the intent here is to introduce completely new traders, beginners starting from zero, to the causality trading, and to do so step by step by covering all the major topics in a very simplified manner. So if you're an advanced trader, you don't really need to watch that, but if you have not studied the causality, I highly recommend you to watch this. So last time we talked about the money positions. Today we talk about the second massive building block, which is stop hunting. Okay? So these days it's actually an open secret that stop hunting does exist. And I would like to clarify, we are not talking about the stop hunting conducted by the broker. This comes on top. We're talking about the actual inherent stop hunting which the smart money algos conduct every single day in the forex markets. We distinguish between three different types of stops: the MTS, the medium-term stops, the STS, the short-term stops, and the LTS, the long-term stops. These are shown in the causality. We go through the concepts and then we show examples from real life from the MCA web, how this looks like in practice and how this also can be incorporated in your trading. But let's start from the basics. The most dominant stop accumulation is the MTS, the medium-term stops, particularly on the hour chart and 30-minute chart. So what do we see in real life? We often see that the price is dancing around, is moving away from the actual target, and eventually, boom, they conduct the stop hunt. The smart money eventually goes to this target level and takes it out. And once it does it, like here we had the stops of the dumb money sellers because the MTS is above the price. If the MTS would be below the price, it would be the stops of the dumb money buyers. In this example, we see that they conduct the stop hunt, they take out the stop, and of course the dumb money therefore cashes in their losses, while the smart money profits. Okay? So the MK web shows those MTS as green horizontal lines. They do not repaint. They stay in the chart. Once it has been hunted and the price continues, you can still see the MTS in the past, but it doesn't continue because it has been cleared. Let's see whether, let's look at the real life example so you instantly see how this looks like. Here we go. Like here in euro pound on the 30-minute chart, we see the MTS. It becomes a target for the price, and as you can see, boom, the smart money goes for it, takes it out, and then often turns in the opposite direction, which we call post-stop hunt move. Okay? Now take note of the fact that most of the time the smart money pushes the price away from this main target. Okay, they want to clear the counter side and then they want to go for the so-called main target run. Okay, so that we will cover in the following videos via the time and range principle, via the pre-counter run principle, the dumb money pricing and principle. Okay, we're going to go a bit more into detail regarding these points. But we'll understand that the smart money is in no rush. Okay, once there's a stop accumulation, they have no need for taking it out immediately. Quite the opposite. They will use the time and the range to the max before going for the main target hunt. Okay. Now, all of this is of course tradable. Many people want to trade the main target run outright, which you can do. But you need to take into account other factors such as the dumb money positions to find the good moment where you can trade towards the MTS. But of course that you're trading the actual stop hunt. That is a known documented setup. Okay, we have. Some people, they like to first trade away from the target and then only trade the actual target run once it's very clear that it's going to happen. Okay. Alright, so let's continue. Next we talk about the so-called short-term stops. These are shown in blue and in turquoise on the y-axis. Once they are touched, they turn yellow and then disappear from the MK web. So what you can see is often if those STS are on the way to another target, they are taken on the way. Okay, sometimes the smart money goes straight for an accumulation of short-term stops as an own target. Okay, so these stops are not dominant, but they are very important, especially if you want to know where the pullbacks are going to, when the price is going to turn again. And in fact, we can again look at real life examples. I picked this one here. So of course, often these moves are tradable. Okay, so this is a good example actually from last week. Yeah, this is cable. So we have the short-term stops down here. Of course, there's also a medium-term stop, as you can see. So often these different stops accumulate at similar levels, of course. But we can already see here that the smart money is keen on taking out this level. This is exactly what happened later, okay, on Friday. So they went and took out these short-term stops down here, okay? The blue lines, they turn yellow, then they disappear, okay? So often these can be tradable, but sometimes they're just on the way and taken out on the way. For example, if the market is in a squeeze move, yeah, and they're not as dominant as the MTS, but they're still very relevant. The more refined traders pay quite a lot of attention to them. Sometimes we also see a particular long accumulation of STS, of short-term stops, and then often you see that the price in fact goes there and takes it out and then reverses. We often see that, for example, in Kiwi dollar last week. Okay, so these are the STS, short-term stop accumulations. Okay, nice. The third type of stops we see on the MK web are the so-called LTS, the long-term stops. Okay, they are shown in a pink color on the MK web. This is something where you often see that this happens only after a few weeks. It doesn't happen every day. That once a market is quite stretched in one direction, we see that those long-term stops are within reach, and then these are those extended moves where you see fake reversals. Often also they use news announcement or the FOMC to clear those out. Yeah, they hover around those levels, and then once the time is right or more money sellers came in, boom, they take those out. And also you see often that once they have been cleared, the price reverses, and sometimes even completely. Yeah, so because the LTS are kind of the last target. These are the long-term stops which accumulate and which are within reach only after extended moves. So you need to really pay attention to those. Okay, again, let's look at a real life example and how this is actually shown on the MK web. Here we go. So for this I picked Kiwi dollar on the forward chart. You see these pink lines, they are the long-term stop accumulations. The reason why Kiwi came down so much and cleared the lows was this. Look, they go exactly to the LTS, they maybe undershoot or overshoot it a bit, but then this is the main target. Okay, by hunting these long-term stops, they take out also big position traders on the dumb money side. Okay, so these are the three types of stops which you can see on the MK web. So to summarize, dominantly, and we see them daily, we see the MTS, which are often very tradable, either with the move away from the target or with the actual target move, which many people love, trading towards the target, or even once the target has been hit, the post counter move back to the original direction. It's an incredible tool. Okay, it's data based. This is not price based, it's data based. Very, very powerful if you incorporate this into your trading. And guess what, if you place your own stop, let's say for some reason you're sold, of course you will do well by placing your own stop above this MTS of the dumb money sellers at a bit of a cushion, okay, but then you have a good chance that even if the price goes against you, that it's not going to take your own stop. Okay, so you can use these stops in different ways. It's very essential to understand that this is a dominant factor in the market. This is not a peripheral phenomenon. Last time we talked about the dumb money positions, and they are as important as the stops. But now the magic happens with the causality when we combine those two factors. Yeah, and that's going to be covered in the next videos. Because, surprise, surprise, all these things depend on their dumb money positions, on the position bars. And that's very original. You don't find this content anywhere else. If the dumb money sellers come into the market, okay, the shorties enter, yeah, they come here and sell, then you have a good chance of the smart money algorithms pricing in these dumb money shorties, and that actually creates an actual support, because if the price would drop, these dumb money sellers would win money. So they conduct the stop hunt, clear out the LTS, SDS and all the rest. Those dumb money sellers are kicked out of the market at a loss. Surprise, surprise, and then what happens? The market then reverses after. Yeah. So we're going to go into more detail regarding these aspects. And because guess what, sometimes you see the opposite scenario, yeah. And if you don't understand this, you have to watch the first episode of the simple series. Sometimes, let's say we see suddenly massive buyers coming into the market, okay, the longies, you see green position bars and they buy. Guess what, most of the time then, why should they still let those longies win? Yeah, these are the situations where you see suddenly that they may do a little fishing, but then actually go down, and there's a complete dumb money switch. Yeah, to the point where sometimes they also leave some stops on the table. That happens as well. They don't always need to clear everything out neither, but often they do though. Yeah. So you can see already now on this very basic level, when we combine those three types of stops with the actual dumb money positions, you will have the real edge, and we're going to come to that, and we'll go through some really cool aspects. This is very exclusive knowledge. Nobody will show you that. Okay, so hopefully you will appreciate that. This is very, very fundamental knowledge which people don't have access to, because they think, yeah, there are some stop hunting moves in the market, but it's a bit random, and you know, they don't understand under which conditions. But the causality shows you in detail under which conditions, and you can trade that. Okay, that's an actual proven edge. So I don't want to get ahead of myself. I want to keep this simple. So thank you for your time. I hope you enjoyed it, and we're going to look also at more real life examples. From this screenshot you can see, look at that, boom. They take the lower MTS, they revert, okay? They take the upper MTS, they revert. This is not random, ladies and gentlemen, do you understand that? This is not random, yeah? These are the targets which are caught and taken out, and then the price reverses. This, if you don't have any idea about this, then you're on the dumb money side, and that's the situation where it takes you a stop and then reverses in the expected direction, which is so painful. Everybody has experienced that, yeah, at the beginning. And look at this tendency just on the screenshot. Taken, 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 taken. And then the SDS, taken. Yeah. Then eventually, if they are overstretched, they get the LTS, boom, they take the LTS as well. Yeah? So you see already from the screenshot from the MK web, we see the stops, we see the dumb money positions, and then we see also much, much more, which gives us a real edge. But let's go step by step. All the best.